All right, we're back to QuickBooks again. We just a preview of a recap of what we did with the first video that I sent. We dealt with the vendors, and we were looking at the vendors is equivalent to suppliers. We looked at purchase orders, we looked at receiving inventory, we looked at entering bills against inventory, and then we also looked at paying bills. We also looked at this process, which is a simplified process from entering bills and paying bills. Now, we said that we're going to look, the next video is about customers, and this is the video that we're going to talk about customers. Now, on the home page, we said one of the advantages of QuickBooks is that you're able to, QuickBooks has made its interface very user friendly. You don't have to have accounting background. That's what we said. You don't have to know so much about accounting to be able to handle QuickBooks. All you need to know is a bit of business transactions. And if you know business transactions, and there is pretty easy for someone who has gone through the basic education system in Kenya. Even you don't even have to go through the entire basic education system. All you need to know is about receipts, about receiving money, and about paying, and a few other things to be able to use QuickBooks. So it is very user friendly, and one of the reasons why it is user friendly is because it explains, it shows graphically, or it uses images to show. And as you can see the steps or the stages. Like for example, here in our customers, these are customers we sell goods and products to. You start with the estimates, and then you create invoices. Then you can see how each process leads to another. You receive payments, and then you record deposits in the bank. You see now. The other thing is that when you move your mouse over any icon, it tells you what that is. Like for example, if you look at this icon called estimates, it tells you create an estimate, quote, proposal, or bid. Higher. This one is create, bill your customer and receive payment later. So you already know if you're going to create an invoice, if you're billing your customer for something you have delivered or some job that you have done, and you're going to receive payment later. In this case, record a payment you have received from a customer against an invoice or billing statement. You see? And then you remember here, this is sales receipts. Bill your customer and receive payments at the same time. So this is like walk-ins, where someone just comes and buys a product from you and pays cash. Or you go and you do a certain service. Maybe you're a hairdresser, you perform a certain service, and after you perform, they pay you immediately. So this is a cash payment or a cash transaction. It starts and ends almost immediately. There's no promise to pay in the future. Excuse me. So now we're going to go step by step. I'm going to explain this part of estimates. When you are a business that issues estimates, you're probably an engineering business, civil works business, contractor businesses. Those are the businesses that use estimates because they don't know, for example, how much quantities are going to, exactly how much quantities are going to be used, or exactly how much expenditure is going to be incurred. So they use estimates. They tell their customers, look, or you tell your customers, assuming that you're an engineering business where you make roads. So you tell your customer, could be government of Kenya, you're building a road for the government of Kenya. They have contracted you to build a road. So you tell the government of Kenya, look, it's going to cost you a given amount of money to make 1 kilometer of road, but these are our estimates. So we are going to give you estimates against which we will issue an invoice, a complete invoice later, because after you've finished building your 1 kilometer road, you could find out that you've spent more than what you may have invoiced. Like for example, if you invoiced 10 million to build that 1 kilometer of road, you discover that you've used 11 million, then you're going to have to change your invoice to reflect the actual amount that you spent. So because we are simple, we are not going to use estimates. all right? But I've explained that these estimates are used when your business is generally a business that involves itself in you know, providing services that you cannot completely, you cannot factually, you cannot accurately tell how much it's going to cost you. So the best part to start with is creating invoices. And as you remember, as you recall what we said about invoices, invoices are documents that record transactions that have happened where we have done something and have been promised to be paid at a later date. So we record all those transactions. If it is goods that we are delivering, we deliver those goods but were not paid and were promised to be paid at the end of the month, for example. So if you are a salon business, you have regular customers, and some of your customers pay cash and the other customers pay later. You know, they promise that at the end of the month they're going to pay you. So this is where you record those credit sales. When you're doing credit sales or you're doing credit business, this is where you record. Higher, let us see how an invoice looks like. So this is a document called invoice that's opened, and as you can see, it is not very different from the purchase order. Now, if you're going to issue an invoice, you will be issuing that invoice to somebody, to some business. So you can select your business, your customer, and some customers are walk-in customers, or customers that will just come, or customers you have established a relationship, a new relationship with them. So you can, if they are not listed here, you can add that customer. Say for example, you call it a customer called 10 Enterprises. I don't know whether that's how you write enterprises. And then, so 10 Enterprises, you don't have an opening balance. If they came with an opening balance, meaning that they owe you some money, you would put that opening balance there. But in this case, we are saying that this is a customer, a new customer as of today, according to this. And then 10 Enterprises, let us separate this, put instead of typing again, I can just copy that and paste it here. So, and I can put full names, phone number, blah blah blah, work phone, blah blah blah, mobile phone, blah blah blah, all these details, and then I say okay. So 10 Enterprises now has been listed amongst a group of other customers. So she is there, she's been listed higher. So we are creating an invoice to 10 Enterprises. Maybe we've delivered certain goods to them, so we create. Now, we could also create, this is 10. We've created an invoice for them. Always remember to be careful with the dates. Dates are very important, so you have to be sure. You have to look at the date and ensure that that date reflects the date of invoice as you would want it to be. As you would want it to be. Do you want it to be recorded this month? Do you want it to be recorded in next month? Do you want to be recorded it in a previous month? So you have to make sure that you are good with that particular date that has been selected for you. If you are not, you can always change it from here. Now, QuickBooks issues an invoice number for you, so you don't have to keep creating invoice numbers. Remember, invoice numbers, the best is a series, so it will remember the last invoice was 300, so it will issue a new invoice number which is 301. Higher, if you had there was a purchase order related to the work that we have done for 10 Enterprises, this is where we capture that purchase order. Remember, a purchase order is a document. What we discussed previously, that it is a document, a legal instrument from a buyer to a seller. From a buyer to a seller. So a buyer, a potential buyer, will issue this document to a seller ordering for certain goods. So in this case, it could be that in our case, we are the sellers. 10 could have issued a purchase order document to us, and this is where we capture it. If indeed she issued, 10 Enterprises issued a purchase order this is where we would put the number of that purchase order, so that there is a relationship between that purchase order when the transaction began, and then the relationship between that purchase order and the invoice. So we invoice them. Maybe they ordered us to deliver maize to them, and we record that purchase order, the one that they brought to us. We look at the number, we record it there, and on that purchase order maybe there were terms, and this is where we put the terms of that purchase order. And these other ones are just details, how the goods were brought, or how the goods are supposed to be delivered, or how we are supposed to deliver the goods. Are we delivering using plane or post or DHL or these other ones? And you can add more. This is freight on board. FOB means freight on board. Those are details that I don't want to get into. So anyway, this is an invoice. The most important thing we have said is we have to ensure that we have our customer, we have our date correct. All these are going to be entered for you, and then of course we are going to record the quantity. Say for example, we are ordering to we are delivering, we have delivered actually to 10 Enterprises 12,000 bags of hockey stick, or 12,000 hockey sticks to them. Now this is interesting. The moment I selected 12,000 hockey stick, it tells me you don't have sufficient quantity on hand to sell item hockey stick. So it alerts us, it tells us, hey, we cannot sell something we don't have. Say for example, we just want to sell 12 pieces and see what will happen. Oh, 12 pieces is okay. If we put 12,000, it tells us we don't have sufficient quantity. So if we put 120, let's see, we have 120. And then price of each hockey stick, maybe we can here now say best sales price is for best sales, maybe for each quantity is 213. Remember we bought these hockey sticks before and we said $189, but now we are selling it at 213. Yeah. Class, again, maybe you can say school. Yeah, and I'm saying that because I don't want some pop-ups coming up all the time. Higher. Now it has done all the calculations. We apparently have GST on sales, PST on sales. These are like taxation issues. Yeah, you can see that it is this one is 2.5, and when you add all these are you can actually just delete, put them to zero here, because those are, and you know, I just said enter, but you can go back. Sorry, let me just go back. These are things that belong to a different country. We don't have GST on sales here in Kenya, or this PST. I don't even know what they are, but I'm satisfied with my invoice, and they say I save and close. So I have billed a customer. I did some work for them. Now I delivered some hockey sticks to them, and I've issued an invoice. So I wait until the time that they're going to come and pay me. They come, they receive the invoice. Within a couple of days, they issue a check or generate a check for me, and they send that check. When they send that check, I will use this next step, which is receive payments. So I click on receive payments, and I receive from 10 Enterprises, and the payment amount, this is the balance, is 2 million. They send to me, sorry, this is where I type 2556123, like that. So you can see they have paid the full amount. So and you can see amount due is 2, is that, amount applied is that, there is no discount, so I've paid the total amount, you know. And if you can look here, okay, and then of course always remember date, when maybe they paid a day later, you know. And then I could put this deposit to, maybe I deposit into the checking account. Remember, I have a checking account, yeah, and that I've been using. So I put it in there. See, I've received 2.5. I put it in that account. Then I say save and close. So I've received. Wanjiro Enterprises does not owe me anything. Now, in the case where someone just comes and walks into a shop and buys stuff and pays them immediately, we use create sales receipts. Receipts are, of course, when I pay for something, I'm issued with a receipt. For example, I go to the supermarket, I pay for some certain quantity of goods. When I give them the cash, they issue me with a receipt. So in our business, when we deliver or we sell something to a customer who pays us immediately, we issue them with a sales receipt. So we could also select a customer and a different customer, maybe Lee Scott. This one, Lee Scott, we have come to a shop and they wanted hockey sticks. Yeah. Oh, I don't have sufficient quantities of hockey stick. Maybe replica uniforms, and class I say school, right? Quantity I say 20, right? Maybe let's select something that has a quantity, those ones, yes, like kitchen blades. We say quantity, it has a rate, and they bought 20, and the total amount is 2,900. We can remove this 0, just put 0 there and put 0 there, and you have your 2,900, and you can put a customer message here, thank you for your business. So when you print this receipt, it will have a customer message written, thank you for your business, and then you can say save and close. Something has popped up, information change, you have changed Roadrunners, Lee Scott, sales tax code. Would you like to have this new information appear next time? Yes, we can say yes. All right, and then one or more items are not being assigned a class. Remember about those classes, just save anyway, select save anyway. So now we have seen how to create invoices, we have seen how to receive payments. It could be payments for invoices issued or cash payments. We have been paid in cash and therefore we issue receipts higher. Those are the most important sections of this customer segment. Yeah. Now let us look at others. Let us look, like, for example, let us look at statement charges. And statement charges, what it is. Look, when I move my mouse over on that icon called statement charges, it gives me a hint of what it is. It says accumulate charges that will be included on a billing statement. Accumulate charges that will be included on a billing statement. Let's click on it. Higher, Wanjiro Enterprises. So these are Wanjiro Enterprises, and you can see the transactions we've had. We only had one transaction. Amount charged, they bought some items and they paid the full amount. And you can see this is a statement for that customer called Wanjiro. It's a statement, just the way you go to a bank and you request for a statement, your statement, it will just show the transactions that you've made with respect to your account, you know. So it will tell you when you received, when you issued. Say for example, you went and withdrew 50,000 from your account, then you went and deposit 80,000. So this is a similar, it's a statement. And look, they say Wanjiro Enterprises accounts receivable. If you remember correctly, accounts receivable, we talked about the balance sheet, and we said the balance sheet comprises of three key items. The first item is the assets, second item is liabilities, and the third item is capital. Now we are looking at this one called Wanjiro Enterprise. If Wanjiro had not paid us, they owed us 2.5. It could be an asset, you know. This is accounts receivable is an asset, is an asset, meaning that they owe us a certain amount of money. So that's why you see it's being written accounts receivable. Receivable means that we expect to receive an amount from that particular account, and the account is called Wanjiro Enterprises. But in this case, it's showing an ending balance of 0. So we don't, they don't owe us. They've already paid their bills. Hi, let us look at this customer. This customer has several invoices issued to him, and the amounts charged, and they have only paid this amount. They owe us $124, right? So and so forth. Each customer who transacts with us will have an account. So this one just shows, like this one owes us $1,900, right? So that's for statement charges. Statement charges, maybe let's go back to statement charges a bit and look at something. Right. Let us look at I don't know, this one. That's okay. So basically, statement charges shows us the transaction of each and every customer, and we can print for them if they wanted a statement charge, right? So okay, fine, that's okay. All right, let us go to statements. So this is where now you can create statements for your customers. You can create all customer statement that shows all customers, maybe a statement that shows one customer, and maybe a statement that shows multiple customers, maybe a range of customers. Maybe you have you want to show a statement for customers that come from a certain region. You know, maybe you sell to different regions and you want to print out a statement that shows customers from a certain region. But you could also print one customer, a statement for one customer, maybe Wanjiro Enterprises, and then you say you can either print or email, or you can also preview. So like for example, we are previewing. So this is a statement for Wanjiro. Remember, Wanjiro has a 0 balance because they've paid what they owe us. Say for example, they want this, and you could just print it for them. So that section is for now printing those statements, especially when you're dealing with a business that has a high turnover of customers, or at least you have many customers, and you're dealing with, and these customers are dealing with you on a day-to-day basis. Maybe they come to your shop maybe 12 times a month, maybe 17. Others will come even 100 times. Maybe they come in the morning, in the evening, and in the afternoon, and maybe 3 or 4 times a day. You know, like supermarkets. You know, they have so many customers dealing with the supermarket. So you could issue statements. Even banks, you issue statements to their customers. So sometimes when you do some work and the customers say, no, we had 2 defective products. Those 2 defective products they send back to you. This is where you are going to issue refunds to your customer. You know, this is a credit memo. You credit your customer, so that if they were owing you 10 for 10 items and they return 2, you credit their account using a refunds or a credit note. So now we have dealt with this section of customers. Maybe next time we are going to deal with the employees. So that's it for today. Just watch this video. Make sure you watch this video, and we are going to do an exercise. Thank you.